All right, guys, welcome to the second trade breakdown in this format. Today, I'm going to be talking about the second trade. This is the fifth entry pretty much of the year that I took. And this is going to be the second recap of a trade that I deem to be valuable enough to obviously share on YouTube and to give insight alongside the theory and liquidity concepts, kind of the learning that I'm teaching you guys simultaneously. So we're going to be going over this trade, be applying some of the concepts that I've already put out on YouTube, and just overall talk a little bit about my management, what went right, what went wrong. This was quite an aggressive trade. I'm going to talk a little bit about the difference between the two type of entries that I do, where if you already see kind of the chart in front of you, you should be like, oh yeah, this was that that CPI, first CPI of the year, pretty much on a Wednesday, right? And we already talked about the long that happened in this day. At the same time, right after the event, I also went short. This was, for me, quite an interesting play. So let's go straight into it, and let's kind of see from the higher time frames. We already talked a little bit about it in the previous video, right? What we can see is that H1, H4, right? Quite evident in my opinion. H4, the one thing that we wanted to look at was making sure that there was some sort of body close below the distal line of that imbalance, which was right here, which was very, very evident to see. So seeing that kind of sparked my interest, created that little neuron activation where I was content and confident enough to look for some sort of confirmation-based shorts to the downside. After we did that, we will be going into H1, where you can see that once you line up pretty much everything with H1, we get quite a nice confirmation. So if we get rid of the H4 annotations, we can see that that H4 imbalance is refined to pretty much the leg that we have here, this bearish leg right here, where this would be the entire inefficiency, and fine-tuning that just to the upper side, the upper imbalance of those two, we get a refined imbalance as such. And we pretty much notice the same thing, right? There's a body close under the distal line of that imbalance, which looks a little bit like this as such. So that gave me quite a lot of confidence, right? The most recent liquidity video that I dropped, and that's why I kind of waited for this, the next breakdown video, was obviously talking a little bit about pressure. So what we noticed in this trade is that pressure was building up, right? And test your fractality here. You can already see price very transactable, very liquid, right? So this would be liquid price action, but you can also see just purely based on the wicks, right? We'll go into the execution time frame in a second, but purely based off of the wicks, that you notice that the pressure was building up, getting rid of everything that was in the mid-range, right? We are taking those orders away from the mid-range, those quotes, and we are pushing them more and more to the extremes, to the side of the range, right? In this case, it would be previous daily high and Asia high, which is obviously the two areas that we were looking at in the previous trade, and then making sure that we were then going for something like this, which is where we got the TP on the previous long, which was the previous trade recap on this channel. So you can see how these quotes were pushed to the extremes already on H1, which is pretty cool to see. So if you understand your fractality, you're going to already know how this looks like on M15. And then like that, we had our CPI distribute this entire displacement in this open pocket, which was very, very nice to see. And then from there, we are trading the reactions, right? So instead of doing some sort of set and forget type of entry just based off of open pockets and imbalances there, we want to see if there is some sort of reaction to these levels. And I am completely content with potentially missing out a portion of that move if it means that for me that impulsive reaction will be confirmed. So that's something that I know that many of you struggle with, is going from just trading patterns and trading every single pattern to waiting one more confirmation and trading more of a confirmation based style instead of just going pure set and forget in that tense. So let's go into the lower time frames, the first execution time frame, right? Let's get rid of the H1 annotations and kind of get rid of these as well. And we'll go into M15 to give a little bit of a general gist of how you can understand how this range was doing, right? So overall, you can see exactly how this formed. We had this upper end of the range, right, which is pretty interesting. This was where we were already in these positions, right? You can see the E1 type of entry right here, where that's a shift. This was the imbalance, and obviously taking liquidity out like this, and then going into the position like that, holding price along these lines into this take profit and into the higher buy side liquidity pool. Right now, let's add a little bit of that H1 on M15, right? And you can see one of two things. Again, all of these body closes of this candle below that distal line of that imbalance, which is very, very nice to see. So that's already one type of like, cool. That's a nice confluence. And if we go into, let's say, where we took the trade on M5, you will notice that this is where it kind of all lines up. So this being the trade itself, where we have H1 like this, notice how nice pretty much, again, all of these confluences are. Very, very content with how all of this was forming. You can see that price is doing one of two things, right? We've seen this kind of happen a lot. Instead of trying to get involved in this price action right here, I would much rather wait for some sort of confirmation, right? Because in this move here, even though that it's news driven, there's still opportunity for price to obviously go higher, right? If there was some sort of follow through and you would have entered, let's say, on an order block here that had an imbalance, but no, let's say, shift to the downside, but you were purely trading off of some sort of weak rollover because this is all being distributed. All of these wicks are all distribution wicks. Then there was more risk exposure, obviously, to the fact that it could still get knocked out purely because you're trading in this big imbalance here, right? And it could be that price was pulling out orders here to the upper end and then going straight to that buy side that it left behind from all of this weak liquidity. So that's why I waited for all of these lows to break simultaneously. Also see how we reacted off of pretty much the midpoint of that imbalance was quite important for me as well. That played quite the role, as you can see here. On M5, right, you can see I'm waiting to see if there's some sort of confirmation of buy side continuation, but we get none of that, which is great. We actually create bearish arrays, imbalance, and an inefficiency here, which is cool because you can see how that holds trades into a bullish imbalance. So these are kind of the thought process that you're doing. Many people, when they are trading, they just trade arrays, but they're not looking at the cause and the effect of things, right? So I understand here, bearish array right here on M5 as well. We are holding that, trading this bearish array into a bullish array. That bullish array in this leg right here gets traded into the bearish one that we created, and that is still holding. And from there, we actually get this little pattern right here. So not rocket science, right? You can see how this is pretty much our leg to the downside, right? That is this part. From there, you can see that roughly around EQ right here, we are holding, reacting, picking up liquidity into the arrays that are still above. So in this case, we had a little bit of an imbalance here, midpoint held. And from there, we actually have two confirmations, which can be taken into account as some sort of break, right? So this could be your market shift and this could be your market shift. Very much like the first trade, right? The one that we did before. And this is something that I really like, where people wait for something where they get into a position just a tad too early. I like to wait for some sort of either internal market shift right here, which is great, which gives me a very, very clear validation point, which allows me to potentially scale in and add size, or just waiting for that second confirmation as well. right? There's nothing wrong with that. And that's kind of the issue that I see with quite a bit of traders is there's too much, let's say, waiting about when it comes to, not understanding where your confirmations lie. So this is kind of on the M2. I was reading price on M2. You can see that the market shift then becomes a little bit more clear, and market execution on candle close, which was great. So M5 candle close, seeing how price reacted here, this was totally okay. And that was pretty much the quick in and out of this trade. In terms of timing, not something I do all the time. Kind of unorthodox in that sense. The validation point was clear because if price came higher than this area, then most likely we were going to go and target pretty much all of these highs right here, right? So I hope that that kind of clarifies it as well, to the sense that I didn't need to put my stop loss above that. I was quite funneled in on the lower time frames. Still a very wide stop in my opinion, going for a measly 1.4 RR, but very, very nicely done. Half risk, so didn't walk away with, a grand prize, but it's these type of trades that will drip the bucket, that you have high conviction, and if you lose, you're also not too fussed about it, right? Which is very, very nice. So that was my second Euro USD trade of the year, and I'll see you guys in the next one. Hope you learned something from this. Let me know in the comments if there's anything you want me to cover, anything that I missed out, or anything that you specifically want me to talk about. Especially on M5, you can see one last little thing, order flow held, right? We had a little bit of a pickle where you can see if New York midnight open would give some sort of reaction. Obviously, the distal line of the news imbalance could give a little bit of reaction, but we actually held, kind of created that new imbalance to the downside, punted into that for one more second, created a liquidity grab as well, created an imbalance to bring it home fully. TP just above the low of the day, and you can see we actually slam right through. And for me, there was no reason to hold it further than that, because anything further than that wasn't necessarily given based off of this execution time frame. So hope you enjoyed, and see you guys on the next one.